Okay, so we've made it to video 8, our final step, and this is where we will be preparing our post-closing trial balance. So what we always do is journalize post and trial balance. So this time is no different. We journalized our closing entries and posted them, so now we have to prepare what we call our post-closing trial balance. And this will help make sure that our ledger is still in balance. So we updated our ledger balances with our closing entries. So now we are going to prepare post-closing trial balance to make sure that our balances are still in balance. Okay, so what we're going to put in this post-closing trial balance is any account that has a balance. So let's start. Our first one is cash. It has a balance of $3,500. Let's see what's next. It looks like accounts receivable of $4,000. And prepaid rent, a debit balance of $800. Supplies, balance of $1,700. So we're just copying over the balances that we have. Equipment, $15,000. And then accumulated appreciation of $1,883, which is a contra asset account, which means it goes on the opposite side. And accounts payable of $3,600. See, salaries payable $500. And capital $19,017. Withdrawals, so all the rest of these don't go on there because this is a post-closing trial balance and these accounts have a zero balance, so we don't have to put those. Okay, and then what I'll do is I will add up the debits and I will add up the credits. And make sure that I'm in balance, and I am. Notice the post-closing trial balance just has permanent accounts because all the temporary accounts have a balance of $0. Okay, one thing to note, our ending capital balance has a balance of $19,017. If you go back to your financial statements, you will notice that the ending capital balance is a balance of $19,017. So you knew what your ending balance of capital would be way back when you did your financial statements, because you took capital, you added your investments through the year, and you added your net income and subtracted out your withdrawals to calculate your ending capital balance. So what you did with the closing process is you took your actual capital account and you updated it to include your new capital balance. So the purpose of the closing process is to take those temporary accounts and place them into capital so that your capital balance on the ledger is updated to match the balance in your capital account on your statement of owner's equity. And that is the entire accounting process. Let me know if you have any questions.